We get a ton of questions through social media and through direct messaging. We get a ton of questions about reverse mortgages. I'm not completely sure I know why we get so many questions about reverse mortgages, because it's actually a very, very tiny category of the mortgage business. But I'm telling you, we get a shit ton of questions about it. So let's answer some of the questions. First of all, what is it? Well, reverse mortgage is the common terminology that got adopted, but what it really amounts to is a company, a financial institution, a financial company will give you a mortgage for which there are no payments. The interest just accumulates. Now, you got to be old. You got to be 55 and up, and that I know some private reverse mortgage companies, which I don't want to talk about. I don't want to get involved with those organizations. I feel we should only be talking about institutional operations, but it's a simple idea. The mortgage the money accumulates. Like, you don't make a payment, and then every month the interest, or every quarter, or every 6 months, or whatever it is, you are compounding interest that grows the mortgage. Unlike a mortgage you're paying off, which is every other kind of mortgage typically, is a mortgage that just keeps going up. Now, who would do this? Why would anybody use this? It's a tool. It's a tool to say that we've got older people who have become retired. They don't work anymore. They find that their outgo of their costs to live exceed what they've got coming in as pensions or investment income or whatever the case may be. But they're sitting on a house worth $2 million or $1.5 million or $1 million, which they paid back in the 1980s or 1990s. They paid $117,000 on a sack of potatoes for, and they paid off that mortgage, or maybe they refinanced if they had to. But the bottom line is there's a tremendous run up in house value and a relatively small or mid-sized mortgage. So they cannot generate enough income, pure money coming into their household every month versus what's going out of their household every month. So the idea becomes, hey, let's do this reverse mortgage. You no longer have to make those payments, so that the pension and investment income you receive will go much farther. What's the problem? The problem is people don't like the idea that their house equity is declining every single month. A lot of people just hate that idea. They have an idea in their head. They like to pass something on to their kids if they have kids, and it distresses them to think, well, eventually this mortgage is going to be maybe the same size as the house value, and then the kids will get nothing. So my plan has always been to die broke. Yeah, like I would absolutely prefer it if when I died, they put my funeral on a credit card of my own credit card, and then when they try to collect, the payments stop because I'm dead, and then my family says, ha ha ha, credit card company, he's dead, you can whistle. But that's just me. Most people are not like me, obviously. So what's the idea behind all this is there better tools than this? By the way, there's only two companies who offer this. There's the people we used to call CHIP. They're now called Home Equity Bank. And the Equitable Bank offers this. They're two good providers. They're trustworthy providers. And they have it. Now, the interest rates are not great. And I'll explain to you why they're not great. Because you don't get any money back. Like every other mortgage, when you put out the mortgage, the next month you start getting payments coming in. So it's a much more rational financial proposition for a financial institution, because the minute the money is lent out, payments come back, you can show the payment stream, you can securitize the mortgage. It's entirely different with a reverse mortgage. Reverse mortgage, you have to have a ton of capital that you're going to put out. You're going to pay off the old small mortgage. You're going to give the people $100,000 cash. You're going to, because they needed it to clean some credit cards up. And then you are going to just sit there and wait. What are we waiting for? We're waiting for either one of the two people, or if there's just one person, that's fine. But if there's a couple, we're waiting for them to do one of two things. One of them to pass away, or them to sell the house, which either one of those things is the only thing that triggers the requirement to pay back the mortgage in most cases. So that's how it works. It's done on a very low loan to value basis, like typically less than 50%. Or they appraise a house for $1 million, we'll give you $500,000 is the most reverse mortgage you can get. So rates are high, like they're significantly higher than normal mortgage rates, maybe 2 or 3% higher. It does accumulate relatively quickly once it gets going. After a couple of years, it's starting to grow quickly. The amount owed starts to grow, and it's Nobody's planning on paying it off. Now, you can pay it off anytime. Obviously, you sell the house, you pay it off, or you refinance the house, or whatever you choose to do. It's fine. You can pay it off, but it does grow fast, and it does grow at a high interest rate. And it is, but here's the good news. They never come to you and say, you got to go. Yeah, we're worried about the amount that the mortgage has grown. Never happens. That's part of the deal, that you don't have to worry about that. They've had some odd cases where people have lived a very long time, but the house price kept going up. So, in the end, it worked out for both parties, both for the person who finally passed away and for the bank. It worked out. But why is this not a big thing in the world? First of all, it's low loan to value. Second of all, it's only for specified age groups. Third of all, most of those specific age groups in many cases don't have a mortgage. They've paid off their mortgage and they aren't under too much financial pressure. So it's a small audience for this product. The most important thing I can tell you, though, is this. You have to guard against children trying to force parents into these reverse mortgages. That's probably the number one concern of people within my industry and the people who operate these banks who supply this reverse mortgage. And they're genuine, and they're not trying to take advantage of anybody. They worry about children who are trying to talk their parents into getting a reverse mortgage so that those kids can get their hands on some cash. Now, some people would say, well, I guess it's an early inheritance, but here's the trick. A lot of these people have more than one child. And if there's the one child is trying to talk the parent into taking out this reverse mortgage, and that one child is planning on grabbing some of the cash, when the time comes to finally sell the house or somebody passes away, there's going to be some splaining to do, as Desi used to say to Lucy. Nobody who's not my age understands that. But there's a lot of explaining to do. And both these banks are conscious that there could be litigation from the other children saying, hey, I think mom and dad got duped into this by evil brother Tony, and we're going to sue you, bank, because you didn't do a good job of making sure that the right thing happened here. And we think you were negligent. So these two banks are very, very careful about this issue. However, and sometimes in the private reverse mortgage world, I'm not totally sure how careful they are. So those are the concerns. Those are the issues. That's how it works. And if you have any questions, leave it in the comments.